All right, what's good? What's good, family? How y'all doing, cousins and family, friends? Robert Williams, your boy here, with another backtesting adventure. You can follow me on IG at the emotional trader or check out my blog post. The link is on my IG, where I'm gonna be posting some of these backtests and things that we're doing here. So last time I shared with you guys, did a backtest on the XLK, also did one on the NVIDIA. So this one we're doing on Visa. So I already started this one. So I didn't want to bore you guys with too much of the beginning aspect of it, but started this one on Visa. So as you guys know, utilizing the ThinkorSwim platform, this back test again is of the rolling fours, um, shared with us by the Dark Knight himself, Mr. Mark Monroe, utilizing his strategy and methodology and picking long-term options to maximize our returns, looking for 300, 400, 500, 600, 700, 1,000% returns on investment by buying, 2-year out options and looking to stay in them at least a year, year and a half. So we've had some fun on the previous ones. We're just sharing the results. And this is just another one on a stock that I'm following now, which is Visa, who I believe is doing some great things. And wanted to see if that methodology would have worked with Visa as well in the past. And the purpose for these back tests, as some folks have asked me on Facebook, really is just to build some conviction and belief, right, in the process. As I mentioned, after hearing about the rolling fours, watching the come up series, I just say, you know what, let me back test this to see if this thing works with XLK. And did a little bit of it, showed my wife, and she was like, if that thing works like that, then yes, you can put some money into it. So that's how it started. And I said, okay, if it worked on XLK, let me take a look at some other ones. NVIDIA was a good one. Apple's kind of tricky because it had a split and my ThinkorSwim be tripping. And, but I got some other ones up that I want to do as well. So wanted to do one on ARC because I'm a fan of ARC, but after trying to start that one, had a lot of sideways movement early on, so it didn't look quite the same. But I'm gonna go back and revisit it now that I've done a few. But as you guys know, I utilize the ThinkorSwim platform from TD Ameritrade, so we're looking at that right now. This is current real time data here. This is Saturday night, November 7th, burning the late night oil, trying to get something in before going to bed for church in the morning. And but let's go into it. So for those who have ThinkorSwim, you can utilize their platform for your desktop, and you can go on the on-demand feature here in the top right corner. So we're going to click on this on-demand, and it's going to take us back into the past. Again, it's still going to be showing us the S&P 500 because that's what I was on in real time. And the date that I have selected already is June 14th of 2018. Like I said, I've done already a few of these trades. I'm going to take you back to show you what I've done. And then we're going to continue to move forward here because June 14th, 2018 is going to be an interesting one because people have been asking me about rolling the option and not just doing exits and entries. So I'm going to try and do a rolling option on this one, and we'll see how it goes, okay? So let's go to Visa, and V as a ticker symbol. And as of June 14, 2018, Visa was sitting at 135.02. So I'm going to pause this right now. What the cool feature thing with on demand is that, like I said, you can pick your date in the past and you can pick your time. And so this will be 10 a.m. Pacific Standard Time because I'm on the West Coast, Yay area. That's why I got the Golden Gate Bridge in the background. West Coast to the best coast. But I love all my cousins across the country, you know what I mean? And internationally, because I know come up cousins are international as well. But you can pick date, you can pick your time. And a reason for that too is like, look, if you feel like you can only trade certain times of the day, and you want to test out a strategy that you've been working on or thinking about, well, you can test out that strategy in those specific time and time slots and hours of days that you can actually trade in your time zone. So that's the real cool part. And then you can even pause it or play it. So right now, as you can see, it's playing and it's literally ticking off at, 1 second. If you fast forward it, it only fast forwards really by a little bit. So it doesn't really do much of a difference. Or you can fast forward it by 3 times. So this only speeds it up. If you click on here, it speeds it up by every 3 seconds. Really doesn't make much of a difference because you're not going to literally sit here all day. So speeds the day up by a third if you really want to play it as true as you want it to. But let's go ahead and pause the time here just so I can go back, show you the entries that I've done on this stock already. So I'm going to punch us out to the 2-year daily. And this is my no EMAs, no nothing. I got these trend lines on here, but this is nothing on the chart, as you can see right now. I'm gonna pump this up here so we can make it bigger. And let me take you over to the monitor tab so to show you the trades that I've done. So done what we have 1, 2, 3, 4, 5 trades I've done so far on this back test. So we've done one on April 20th, again utilizing the Dark Knight's strike methodology, literally taking the 2-year performance, taking the current stock price, doing the 1.5, buying the furthest out option expiration date possible, with the 1.5 performance, doing the 10% shave off, and that was giving me these strike prices to pick. So on April 20th, we did one here for 13 contracts, January 2019 expiration date, and the strike was 110. Got those at 365, right? And in this also, with this process of doing this back testing, I wanted to go ahead and do something where we're investing roughly $5,000. If it could be a little bit higher, it could be a little bit lower, but in this case, we're doing roughly $5,000 investments in each one of these entries on a quarterly basis, okay? So we have June 2017, we got 11 contracts, same expiration, and it actually gave us the same strike based on the strike price selection. But this time, obviously, it's a little bit more expensive, $448. And then we have one in September. We utilize the December 2019 because I was available of an expiration date, got 6 contracts, $120 strike price, $7.85. Then we did a December and we did a March. So December 2017, March 2018, 4 contracts, 5. Both for the January expiration, one at 120, one at 150. So some interesting stuff. And then also here, so far, here's the results of those entries. You're not going to hit the drop down for my people here. There you go. All right. I was like, don't embarrass me in front of my friends, y'all. All right, so we have 1, 2, 3, 4. All right, so you see 5 entries here, but you also only see 4 on it tracking. And the reason for that is the first 2 trades were at the same strike and the same expiration. So you see 24 contracts here, and that's the 13 plus 11. So of course they have an average price of $4, taking the average of the 2. But the mark price as of today's date of June 14, 2018 on the back test, it's worth $27, and it's a 586% profit and at $56,000. Pretty nice. And here's the one for December. Those 6 contracts are up 228%. The 2 January, the last 2 trades that I did, the January 2020 calls, that's this December one and this March one. The December one is up 125%. The March one is up 24%. So far in these trades, I actually haven't done full calculation of total invested, but I got it on an Excel sheet. But so far for these trades, we are profitable $74,000. So let's take a look at the Excel sheet for this. And just so you guys know, I ain't fronting, no capping. There's a dark night strike price methodology that I've been doing and utilizing the true numbers from the back test, determining it all based on that. But here's what we have so far of the entries. And I'm gonna bring it to the middle, zoom in, be nice, zoom in more, there you go. All right, so here's all 5 of those entries. And so if we want to take a look at our total investment so far between April 2017 and March of 2018, so far we have invested down here at the bottom. I don't know if you guys can see it. Let's bring it up some for you. But we've invested $22,000 over the course of those 5 trades. And with those $22,000 so far, we are at a profit of $74,000 on this back test. So some pretty amazing stuff. I mean, I know you guys are believers already, but this stuff is just still some of those days where you just maybe having like, is this thing going to work? Like if you guys are like me in XLK and you got in during the quadruple witching week, I've been down majority of that time. And even though that thing's bounced, gone higher, came back down during the election time, which we just realized who our president was, but finally it's over as far as knowing who the president's going to be. But, and then it bounced up all election week. So those who may have got in at that 110, ooh, you're probably sitting really nice. I'm still in the red, but got so much time available to us, which is okay. But stuff like this makes me feel, okay, there is light at the end of the tunnel. Things are still green. This stuff still works. Just stick to the script, right? Stick to the script. So as I was saying, $22,000 or 23 invested, providing so far a return of June of $74,000. And if we go to the chart, just to give some significance to those days of entries, I'm going to throw in some EMAs on this. I have 5, 10, 20, 50, and 100. Bear with me on the lines, but let's go to April 20th, 2017, so you guys can see what that entry looked like. This is in this time frame here. So where are we at? April 20th, this day. Is this on the right? Yes, on the daily chart. All right, so this day, a bounce up. Looked like we had some flat movement. Yeah, we were basing pretty much here. Lost it. My bad. There we go. All right, so we had some basing here, and I'm like, oh, you know what? This thing pops up. That's a good entry. So I got in on that. The other one was 613 that we got in on. Where's that one at? 613, 613, 612, bouncing off the 50. I said, oh, okay, that's nice. Came up, get in on that day. Obviously, this would have been a better day. But if your rule is to, hey, bouncing off of a strong support like the 50, EMA, that's a good entry point on there. Let's see, next was September. Bouncing over to September. I can do this the slow way. That's the slow one. All right, 919. Where are we at? 919. This one got me a little bit too, because I was like, oh, okay. It's been bouncing off the 20, right? Came up, bounce off the 20. Came up, bounce off the 20. Came up. I'm like, okay, that's a bounce off the 20. Enter the next day. And said, no, I want to bounce it. It's okay, right? So many days later, and we're in it for the long haul anyways. But obviously, look, that would have been a better entry around the 25th or the 26th. And of course, I don't really know what was going on September 2017. So all those things you do kind of want to take into account. So let's go over to December. Where are we at? December 6th was our entry day. Is that here? Oh, that's here. Okay. So this one, look, we bounced off the 100. I'm like, all right, that's definitely a solid entry. You know what that reminds me of? Too? That reminds me of something recently bounced off the 100. Oh, Apple bouncing off the 100. Had an alert there, good entry. I'm focusing on other stuff, didn't entry, and it just goes up the next few days. Silly me. Troy mentioned that too on Market Mondays when he said, you know, it's all about what's your plan, even while everybody else is doing their thing. And Troy had the alert at the 100 simple moving average on Apple during election week. Smart dude. I was thinking the same thing, but I didn't enter Apple, so that's not what I was trying to think. But look, we got the we got the Visa bounce, 12.5, round the 100. This gray line here is the S&P moving up just to have that comparison over there. So that was a good entry point. And this was just some sweet movement, right? Look at that. That was some sweet movement from the 107 to the 126 area. That thing was just jumping. We say trap house jumping for trapper right there. All right, so next entry was March 21st. So let's go over to March 21st. Looks like we had that, what was happening January and February 2018? I can't remember the exact dates, but I remember this dip. I was kind of not trading at this time because of the uncertainty I had in my own personal trading. I can't remember what it was, but nonetheless, we entered on March 21st. So we're back over here. Okay. So, I entered back in. That's something silly. All right, so I guess I was looking at flat base. But that was kind of stupid. But I wasn't following the reason. Nonetheless, this is resistance. Resistance, resistance, resistance. I guess I was figuring it was going to break out because it was staying above the 20. And I also had this trend line up. But obviously it broke down. So look, if you were in like a weekly option, you'd be sweating bullets. If you were in a 1 month, you'd probably be sweating bullets. If you're in a 3 to 4 month option, you still have some good time on your hands. If you're in 6 months, but we're in it for the long haul. So even when this thing dips from 124 down to 117, it's no sweat off your back. Why? Because you got time on your hands. I mean, how I figure you're buying a 2-year option. You know, if you got kids like me, they at least gonna be 1 or 2 years older by the time you exit this back. So when you enter there and it drops down, and you know you got 700 more days, who cares? Who cares what it does? So don't sweat the small stuff, y'all. Stick to the square. Stick to the square. But that NVIDIA though, when I did that NVIDIA one, some of those was just nasty, and I would have exited. You saw why there was losses on that back test. So that's a little bit of a recap of where we were at and what I've done so far. Wanted to show you those entries. Obviously showed you the price that I got them at, the investment amount, what they're looking like on the return so far in the account. And now we're back to, as I mentioned, we're at today, June 14th. And this one, I'm looking to exit out of the first trade. And this is a little bit tricky because the first trade and the second trade from, if we go here, these two right here are at the same, they are at the same strike price. So technically, we are now in June 2018, we're about 6 months away from this expiration, right? So we would technically want to be exiting around this time because there could be just some decline because of the time value just decaying. And, you know, we're not trying to stick in for that long, but we're also at a point where we're at least over a year on both of these contracts. So we're going to go back to the chart, and I'm looking at this time frame, and this doesn't quite seem like the best time to enter into a trade, but it definitely looks like a great time to exit a trade. We're at all-time highs when we look at the bigger scheme of things, right? You're at all-time highs. You're 6 months away from your expiration. You would only be, you know, with the April trade, that's a year and 2 months. So you're getting the capital gains for holding it long term and not a short term. You're 366 days from your June trade, so you're getting the capital gains on the long term. So you're not going to pay that much and get gouged in taxes, but it's not really a buy opportunity, in my opinion, for a new contract. But I wanted to show what it looks like to roll an option on the platform, and hopefully it works. So let's put the play back on so that the time will start ticking, and let's go over to the trade platform. And if we were going to do a new entry, we are going to enter in, of course, a January 2020 option. And let's go ahead and do the math, breaking down the type of entry we would go in on. So this is the boring stuff I think I put pause on in the other video. But let's go to the chart and let's pull out the 2-year, because we're going to start working on the handy dandy dark iron strike. So we got the Visa. We got today's price. That's small. We got today's price at 135.12. So we got 135.12. We got the 52-week high at 136.58. 136.58. Again, wouldn't normally do this type of trade, but for the purpose of the back test, we're going to do a roll, because people have been asking me, why didn't you roll? I just didn't. But we'll roll it for you. We're on a 2-year time frame here, 2-year 1 day. So I'm going back, I'm looking at the close from this date, right? The 2-year close is $78.57. If you guys are wondering where I'm getting it, it's up here. $78.58 is where we started on our price 2 years ago. And today's stock price is 135.16. So now let's do our math on the performance, right? We've got a calculator on the side, but to show everybody, we got 135.16 minus 78. Look at that, embarrassing. Clickers, horrible. 135.16 minus $78.57. So we have a 2-year performance of $56.59. Okay, we already know we're going to do an expiration of the January 2020, and so now we just got to figure out what our strike price is going to be. This is on 6/14/2018. So kicking it over to here, our 2-year performance, 56.59, and it's punching us all these numbers, and it says, okay, you are going to select a strike that's around 164.20. 164.20. So let's pull out. Okay. Let's go ahead and pull out there. Let's go back to the trade tab. We're in our January 2020 expiration dates, 582 days away. And it says let's pick a 164. So we'll pick the 165. Now, so here's something that I've learned. And 165 would be the ideal one that we want to pick right now. But one thing I learned as I was doing these back tests is that when you have something that has volume of not applicable, it's not going to allow you to do a back test. It's not going to allow you to do like an execution of a real trade. since this volume says not applicable, it's almost like they don't have the data of what was traded that day, if there was anything traded that day on the volume. So it's not going to let you execute the trade. So let's go ahead and let's pick the 160 because we see that there's some trades done there. And I know that this will go through. But to show you guys I'm not fronting, because I was doing this stuff the other day, I'm going to try and enter in this just one contract here. I'm going to confirm and send, and you see nothing happens. It's like I'm trying to buy this, and it's just like not going to happen. So frustrating. But it will go through on this other one. So I'm going to let this, I'm going to go over here and cancel out this trade. All right, cancel it. Back to the trade tab. So let's pick the 160. And I'm going to make my note here. We're going to do a strike of a 160. 160. And let's do our math. Take it up to about $5,000. I think that's 4 contracts. Oh, I'm hecka tripping on that math. 8 contracts. What is 8 contracts? 5280. All right, so let's do 8 contracts. And let's see what price it gives it to us at, because as you can see here, bid is 630, ask is 660. We may get the mid of 645. It's going to pop up here in this top left corner. So we're going to do 8 contracts, and let's see what it gives us. Bam, 645. So we got at 645 contract. I already done messed up. Silly me, I was supposed to do the roll. But let's roll it. Okay, so whatever. We just do an audible. All right, so I just bought 6 contracts or 8 contracts, whatever. Let us go ahead and roll the old one out. I was supposed to be doing the roll. Oh my gosh, it's so embarrassing. All right, let's roll out the April and the June. So I'm gonna go over here to my trade tab. That is so silly. And I'm going to select this line here because this is my April and my June. I'm gonna right click on it and I'm gonna say create the rolling order. So I'm about to buy way more contracts right now. And so we're gonna create a rolling order. And it says that, okay, it automatically sets us up to, let me move my picture here. It automatically sets us up to sell 24 of the contracts, which is all contracts. And it sets us up to sell the ones we have with the January 19, and it just pushes it to the expiration of June 2019. And it gives us the same strike. So that's why we would be purchasing, that's why we'd have to make another investment of $2.20 as a debit on this. But we don't want to actually do that. We want to buy the 160 strike at the January 2020. So what we're going to do is on what we want to buy, we're going to say, we're going to click on that. We're going to go down to January 2020. And it still has the same strike, but we want to buy the 160. So let's go ahead and scroll this down to buy the 160. And as you can see, there was a change from debit to credit, right? Let's do that again. We'll change this one to back to 110. So if we were going to buy the same 110 strike in the January 2020, rolling the 24 contracts that we have, we need to pump out and give the market, this investment $6.03 times 2,400 shares. We don't want to do that. We don't want the 110. We want the 160. So that would allow us to buy, take it to the 160. That allows us to, instead of spending more money, to actually just take a credit of $21.22 of these contracts, and the rest of it is going to roll into the new contracts. So with the math, 21.22, that means we will be taking 24 contracts times 100 shares of contract equals that, times $21.22, means that we would be taking in a $50,000 profit on this trade, and still taking the rest of that money and buying the 160 contract, which was $6.45, and we're going to buy 24 of them. And remember, on a monitor tab, if we look at the math, this is what we're taking in, 50,900. On the monitor tab, we're at 56,000 profit so far. So about $6,000 being reinvested. Doesn't really add up, but this is the system, so that's not like $6,000. That's making sense. Let's just do it anyway. All right. So I hope I explained that right, and I will be right along in a minute. So let me make a note. So 6/14/18, we are rolling 24 contracts out of the January 19 110 strike into the January 2020 160 strike for a credit so far that it says of $21.20. Let's see what it really gives it to us at. And then we can go back and check and see what our P&L is. This is really, let's see if it does it. So it gave us a credit of $21.20. Okay. So now, that's 24 contracts. So now I got us at like 32 contracts on that January 2020. All right, so let's see, what do we do? There's the 32 contracts. All right, so we're fully out of the January 2019 $110 strike. It looks like we fully took in, $56,000. And we've gotten 32 contracts at a trade price of roughly $6.45, and we're at a P&L of $80 on that so far on this trade. So again, the date on here is January 14, 2018. We are out of the 24 contracts from these two bad boys, and we've entered into 24 more of the January 2020. So here's the trades we have. These are the trades that we entered. So essentially, it shows us here that we sold 24 at $27.65, and we bought 24 at $6.48, which means we have that difference there. Pretty cool. And I think this is the true profit and loss year to date of really 46. That makes a little more sense. Let's do the math again. So we have 27.65 is what we sold those 24 contracts at. 2,400 times 27.65. So we took, did we really take, oh yeah, we really took the 66,000, because that also includes the number we put in. And then we bought 24 at $6.48. So 2,400 times $6.45. So 15.45. 1540. So we got 66,360 minus 15,480 gives us a net of $50,880. So this is what we took in. Oh, cool. Well, ladies and gentlemen, that's how a roll works. Learned something today too. I did not practice that before doing this recording. Probably should have did it so I didn't look as much like an ass, but that's okay. We're in this journey together. So technically, we've taken $50,000 now in from our first two trades, and our first two trades had an initial investment. Our first two trades had an initial investment of $10,000, and we've taken in $50,000, and we pretty much had left 15 on the table to reinvest. So that's the beautiful part of doing your rolling, is that you're not taking new money that you had sitting on the side that you saved up. You're just really rolling that, as Mark has explained many times over already, is you're taking some profits from that and rolling it just in the new trades and then taking some off the table, right? Reinvesting, compound interest, and yet still taking some off the table so you can eat. And so that's a beautiful illustration, and that's what I really wanted to share with you guys in this video, and kind of go to the next one. So again, we wouldn't normally buy at the high because Ian would kill us if we bought at the high, but it was at a high to make a sell of those first contracts, knowing that there's 6 months remaining in those in that expiration. So let's punch out 1 month and see what the market did. So where were we? 615 is when we did those trades. Look, it did the dip. See? Should have just waited, right? We always say this. So I said, should have just waited until you hit the 50 EMA, right? And then entered in there. I should have been patient a few more days. Entered in there for a great buy point for our other entry that we did for the 2020 at the 160 strike. You live and you learn. That's why you do backtest. It shows you a trusted system. You backtest and it tells you you trust the system. You trust your methodology. By the way, let's go ahead and look at Bollinger Bands. What did it do? They were outside, they went flat, it was ready into here, and it came down, and then bam, it's back up. So, cool, good stuff, man. Good stuff. This is fun. It's gonna embarrass me by not working. Go to the note. So July, what are we doing? Sitting back, looking pretty. August, you see the August performance. Oh, just dips again to the 50. That's up, dips again to the 50. Back. And so now we're going into September to do some more entries on contracts. So let's go to September 7th in preparation for quadruple witching time. Oh, look at that there. So let's see here. We had an entry that we did here. Bounce on the 50, went up, created a new high. Came back down, bounced on the 50, created a new high. Classic uptrend, right? Higher highs and higher lows. That you connect these two lines here. Are you going to give me my trend line? Thank you. Hey. There's me in front of my friends. In front of my friends. All right, so this thing, technically, as we see it, should be coming down to the 50 roughly. Again, I don't know what was going on in September 2018, but I know there's some trade war talk coming in soon. Learn that from you. So let's go 2 more days out. Let's go like September 11th. Let's see what it's showing us. Ooh, it's showing us a bounce. It's saying we may not be going down to the 50. Let's see if they have any new contracts. Nope, still only back to 2020. Things that make you go, We'll be into the same. Right? A year from now will be September of 2019. And that means that we would definitely be staying in this at least for a year. And then that's within 3 months of the contract expiring. So, what would you do? Would you wait until this date to see if there's some new contracts coming out this week? I think we would probably wait just to give us some more time, right? Let's go back to the chart. That's still a good entry. All right, let's just skip to Friday. Huh, that was a great entry. Beautiful entry, right? Green candle, bounce up off the 20, created a new high. And, all right, so now we know we're not really buying at the high. Let's go back to September. Let's go to the Monday. And let's see what happens. All right, so we're getting pulled back on that Monday. And let's go and see if they released. There we go. Releasing the January 2021 contracts, giving us way more time. So now we're like, all right, cool. We can be buying ourselves more time. So we still have 400 of the contracts that we have positions on. We still have 459 days left. This is our contract we entered on September 17th, and of 2017. We still have 3 positions in here. This is our December 12th contract. This is our March 2018 contract, and this is our June 2018 entries that we got right there. And so now we have a new expiration of January 2020. All right, so let's look at this. We can give it another skip 2 days. Skip 2 days. Let's see what it does. Still at a high. Okay, 1, 2, 3. Kind of looking like resistance. Skip 2 days. Create a new high. Skip 2 days. This is the boring part about backtesting, y'all. It's like you gotta go through this. And you got your pre-buffering. Hopefully you got good connection to do this. Oh, look at that. It goes down there and taps it. The long look on that third. It should be coming back. Should be coming back. Let's go 2 more days. You just don't want to pull back. My gosh, are you going to break out of that? Honestly, y'all, we wouldn't be in for it. Don't give me no slack, because I know I did on the other one, but we wouldn't be into it right now. This is some pullback. This is the pullback. I need that thing to go like that wick to go down more. Mind you, this is at 10:49. Like we're at 10:49 a.m. Pacific Standard Time. Stock market closes at 1 p.m. on our side. So there's like 2 more days left, and I know I'm just skipping through the days, but you gotta make this backtesting go fast. somehow, right? Let's see what it does the next time. The previous day, we have a candle. There are two red candles. I think we are getting more of that. I think this is where we're going to get that pullback that we need to bring it at least to the 20, right? At least to the 20. Let me check my paper. All right, yeah, at least to the 20. Come on. Come on. Let's go to 5. Man, hindsight-being 2020, we can see this stuff as clear as day. We're doing it. When you're in the moment, though, nervousness or emotions will take over. So we're seeing that pull back to the 50 EMA, pull back out these guys. History tells us it will bounce off of it. Let's go to Monday. But history also, this was I believe this is trade war time. The liquidity broke, and now we're pulling back. So pretty nervous, but let's take a look at our trade so far. Still, this one right here, this is our September position, up 271%. This right here is our December position, up 155%. This one here is our March 2018 position, up 52%. This is our June 2018 position, 3 months earlier, up 25%. It had good run-ups, but now it's dipping. And just for the sake of having fun with it, I'll go back to 10.2. Let's go back to 10.2. Actually, I'll go to the monitor tab. So here's what it looks like on 10.8. Let's go back to 10.2 just to see what the numbers are looking like. Oh yeah, these numbers are sexier. We're most likely happier. Yeah, 368%, 200%, 100%, 81%. Oh, we were definitely happier. And that bad boy breaks through the 50, going to the 100, and it chopped that down a little bit, but not by much. That's the crazy part, right? You have exponential growth on the top side because your stock has been running. Even when it takes such a significant fall, you're not losing much. On hindsight, once you make your entry and you get some drop in that, in your stock price, your contract's going to take a hit. And then even when you begin to recover, it's still going to take a little bit longer for it to make it back. So having a good or better best buy point, on the stock is definitely key. Because when you really get it at that support and it moves up, even if it comes back down to your original buy point, the value in your option premiums already increased significantly enough to where even if it falls down, you're still sitting pretty nice with a profit, versus when you buy and it breaks the support that you thought it was and goes down. And even when it comes back past the price where you bought it, you're still in the red or negative. And it's because it was losing a little bit more exponentially than it was gaining. But again, you have time to make all that stuff up. So let's look at the next day, because this is itching for an entry. And the next day it says, okay, bounce off 100, and I'm gonna go to October 10th just to see if we can get some confirmation. No, broke through the 100. Now let's look at them. Look, it's still, you only, from 10.8 to 10.10, you only lost 20%. You're still over 200. That's banana crazy great. That's just it's just like, that's freaking awesome. Freaking awesome. All right. Let's skip 2 days. Let's go to Friday. All right. Friday. Thursday hits the 200 simple moving average. That's what my purple dots are. And here we are pulling up, and we're stopping at the 100. This is a good bounce. Let's take a look at the S&P. Had a lot of notes back in the day. S&P's back over the 200. This is definitely trying to trade talk. Let's see what it says on another day, and then we'll end. We won't end the video there, but I just want to I want to do another entry before ending this recording. Monday. Ooh, stalling out at the 100. Kind of nervous as you're stalling out at 100. That was still looking like a good buy point though, right? Like the 200's got to be like that bedrock that it's definitely going to bounce from. And now you're stalling out at the 100, which means, well, will the breakout not break out, or will it bounce back down? Oh, Bollinger. Bollinger's kind of say buy. Bollinger's is saying to go ahead and buy it, kid. And my next statement is I'm more of a moving average guy, not the Bollingers. So don't murder me. It's just we all have our own trading methodology. Give me my EMAs back, yo. Johnson. Let's go one more day. If it breaks above that 100 simple moving average, that is an entry. Right there. All right. We're entering on them. So let's do our math. What's a piece of paper? What date are we at? We're at 10/16/2018. Stock price is at 141.62. That's what you see right here. The start date of this 2-year performance is all the way back here. What's the close of this day? Close of that day was $82.15. The high, the 52-week high, right, coming back, which we know clearly is 151.56. So what's our 2-year performance? Our 2-year performance is 141, today's stock price, minus where we started, $82.15. It's $59.47. So now that's going to give us our strike. We already know that our expiration for our contract is the new one given, right? January 2021. So let's go to the dark night strike methodology and let's punch in our numbers. Easy. Stock price 141.62. 52-week high 151.56. 2-year performance 59.47. And it does the rest for us. So pretty much telling us that we want to get a strike price that's around 172.20. Bam. All right. Got our numbers. Let's go to the chart. Let's go ahead and pick the 170 strike. This is the closest. Expiration is January 2021. 15th. And still sticking with the $5,000. How many contracts would that be? 4? Because look at how expensive it is now. I mean, Visa's killing it, right? Hot to try. So 4 contracts puts us at roughly 48.60. So we're going to do 4 contracts at let's see what it gives us. $11.30. $11.30 a contract. All right, so that's technically what our 7th trade that we've done. So now back to the monitor, right? These are all the things that we've done. Done these trades, we've had all these positions. And here's our profit and loss on everything that's open so far, right? The only one that's actually been closed is this one. So on paper, I would say on real profits realized would have been the 50,000 that we did our math on from rolling the position, or as it's telling us 56, but we knew we rolled a lot of that in. And now we're in these positions here. So wanted to share, some of this video here of doing this Visa back testing. I will continue to run this until about, I guess I'll run this till like August 2020 and exit out of any trade that's still open. So far, the way that it's looking, we still in this September 2017 trade, and we're about a year in. And so we still have plenty of time to let this one run. We know what Visa's trading at today, right? Roughly $200. And we obviously bought this strike at the 120. So we know that's going to be sitting pretty. We know that's pretty. We know that's pretty. We know that's pretty based off where the stock is as of today. I'll probably just exit it. Again, like I said, around the August 2020, give a full summary update of the results on that one. But just wanted to share this short video with you guys. Again, just showing you doing the back testing, taking a look at, taking a look at the methodology, kind of also how to do it, how to do the roll, which was new for all of us, but just having fun too. I mean, just want to help out the cousins, help out the family, and then show too that I'm really doing this back test as if we were kind of in the market, but then also showing the true extent of the potential of what the rolling forward strategy could be, thanks to Mark Monroe and sharing that with all of us. So I hope you enjoyed the video. Subscribe to the blog and have more content that'll just be coming out. And that blog is not, again, just to sharing. It's just to share, to make money for my kids to see in the future, from what we will be, what I will be doing with my investment journey. Hopefully they can learn from those mistakes. You and yourself can learn from those mistakes, listening to some of the stuff that we'll be talking about, and then other back testing strategies that we'll test and do on the platform together. So, I have a saying that I end in all of my emails is to think, live, and be unstoppable, right? It's trademarked, so don't try and use that. But think, live, and be unstoppable. Appreciate you guys. Like I said, like the video, subscribe to the blog, and ask me any questions that you have via Facebook or on my blog in comments. Hit me up on IG at The Emotional Trader. Look forward to talking and seeing you guys soon. God bless y'all. Peace.